Ciao, mi chiamo Charles Ponzi. Proteste con crissimi di questo con lo streaming Ponzi. Pretende il nome di me. Yes, it is Charles Ponzi here, and the scheme was named after me, and the people are still talking about it today. And he has a Professor Mark's weekly newsletter.
Alrighty, well, thank you, Senor Ponzi. Thank you for being our special guest this week. Everybody at stockmarketjobber.com, we have a special guest, and he's very special considering he's been dead for probably 100 years. But anyway, Mr. Ponzi has showed up to help us understand what's going on in the markets. And you probably don't need to be a genius to understand that. The reason why I'm bringing him into this is because of scam, bankman, fraud. But, like no one's going to beat a Ponzi in jail. When scam, bankman, fraud goes to jail, all of a sudden those gender pronouns that are so important to him aren't going to be that important anymore. Because when he's someone's he slash she, he slash she slash them, I think he's going to have more important things on his mind. And you know what? He does deserve to be abused in jail because the guy's an ass and he's a narcissist, and a lot of people have lost a lot of money because of him. In my opinion, should spend the rest of his life in jail. So anyway, that being said, let's talk about market principles. And the best traders make money because they understand these simple principles. They don't use magical, mysterious systems that are always right because they just don't exist, okay? The best traders in the world, and I've worked with some of them, they make money because they understand market psychology. They let their winners run and they get out of their losers. It's not that they have some special system. The first stage of a trader's development is when they come into the market and they don't know what the hell to do and they ask for advice from some idiot in some chat room somewhere. And then they lose money. The second level or the second stage is when they try to put together some model that they think is always going to work, and that just doesn't exist. I mean, it works sometimes and it stacks the odds in your favor, but when traders become successful, it's because they understand how important market psychology is. So if you check out on stockmarketjobber.com, our market principles page, you'll see a lesson on investment psychology. So right now it's December 21st. So I haven't perfected it yet, but it'll be up there within the next few days. So market principles, right? Some price levels are more important than others. And these are called support and resistance levels. So a support level is a level where there's more demand than supply. If a market's going down, it's because sellers can't find enough buyers to absorb all the stock that they have for sale. In other words, supply outweighs demand. Supply is sellers, demand is buyers. We can almost use these terms interchangeably. So when we know where these levels are, that's where we can make money, because when markets get to these levels, they tend to make big moves. They either break through or they reverse. So we're going to go through the 11 sectors that make up the S&P 500, and we're going to figure out how to make some money this week coming up. So this here is just a review or an oversight or whatever, preview. So we'll just get kind of right into it. So here we have the S&P 500. This is actually the ETF, the spider. Okay, it's people trade this. People ask me like, why don't you follow the S&P? And I mean, this is basically the same thing, but this is what people trade. most retail investors have to trade ETFs. They don't trade the actual SPY because that, or the SPX, or the S&P 500 because that's futures and derivatives. But we don't need to overcomplicate it. This is where we start out. This is like the mothership. This is a big, broad sector. There's 500 stocks in it, which you could probably figure out. And the S&P consists of 11 different sectors. So if we can look at these 11 sectors and get an idea of what's going on, it'll help us predict which way the market is going to move. Now, as we can see, like I said, some price levels are more important than others. Now let's look at this important 390 level for SPY. Why is 390 important? I have no idea. For some reason, the market has decided that's an important level. Why is it not 392 or 394 or 388 or 386? I don't know. But we don't need to know. We just need to know where the levels are. In the institutional trading world, people don't care about Elliott wave or Gann theory or all these crazy esoteric things. In the institutional trading world, and I know what I'm talking about because I spent 20 years in it, the good traders are focused on what levels are important, what's momentum doing, and what are trends. And if you check out our market principles page on stockmarketjobber.com, which you will have to pay for, but it will be a great return on investment in my opinion, you'll learn more about this. We don't need to overthink it. Most people overthink the market. Most people think the market's like a chess game and there's this mathematical way to figure it out. But that's just not how it works. The market is all about psychology. Now, why would a level that's resistance become support? Market psychology, okay? Seller's remorse. People sell, market goes higher. People who sold, a lot of them say, you know what, I made a mistake. I want to buy my shares back, but I'm not going to pay more than I sold them for. So they place their buy orders at the same level they sold at. And if there's enough of these remorseful sellers placing buy orders, the level that was resistance becomes support. Now here we have the opposite. A level that was support becomes resistance. This is because of buyer's remorse. This is a little easier for most people to understand. You buy something, a week later you regret buying it, you tell yourself, all right, well, I'll hold on to it, but if I can get out of this thing for break even, I'm going to. So they place their sell orders at the same level they had their buy price at. And if there are enough of these remorseful buyers placing sell orders, the level that was resistance turns into support. I'm sorry, I said that backwards. The level that support turns into resistance. And then we see here, we have resistance becoming support again. Now, this is pretty important because SPY has broken this important 390 level. So this shows us some market weakness. So there's probably going to be some money to be made on the downside this week. Whether you're an options trader, you could think about buying puts. If you're just a normal trader and you only trade ETFs, or stocks and ETFs, we can look at some inverse ETFs that go up when the market goes down. So let's go take a look at the biggest sector in the market, and this is technology. And you can see it here, how clear it is. It's really kind of amazing, frankly, if you think about it. Look how precise these levels are. This is the technology sector. We're talking about literally trillions of dollars. Yet somehow the level that was resistance converts into support to within literally pennies. I mean, literally within pennies. This is a $129 security, and these levels are within 20, 30 cents. Now, an academic could never be able to explain to you why this happens because there isn't a logical reason unless you understand market psychology. The reason why a level that was resistance can become support is because of seller's remorse. So this is stuff to know if you want to be a successful trader because it helps you decide where to place your buy and sell orders. For example, say you caught this rally here and you were thinking, gee, where should I sell? Notice how this resistance was at the same level there was resistance back there. Oh, Oh, all right, all right. Senor Ponze wants to come on and talk a little bit more. All right, let's hear a little bit more about your interesting life and your infamy. And a lot of people know the term Ponzi scheme, but they don't even realize you were a real person.
So I opened up this shop in Boston in 1919, and my idea was to sell these business ideas to contacts that I had in Europe. Well, I get this letter from a company in Spain asking about advertising catalog, which included these international reply coupons. Well, I found the weakness in their system there, and in principle, it gives me a chance to make some money. So these international reply coupons allow a person in one country to pay for the postage of a reply to a correspondent in another country. And these international reply coupons were priced at the cost of postage in the country of purchase, but could be exchanged for stamps to cover the cost of postage in the country where they were redeemed. Now, these profits were different, but they were a potential profit. Now, after the World War I, that inflation had greatly decreased the cost of postage in Italy. In Italy expressed in US dollars, so that an international reply coupon could be bought cheaply in Italy and exchanged in the for US stamps of a higher value, then which they could be sold. So I claimed the net profit on these transactions was in excess of 400%. Nobody ever checked it out. So it kind of sound like that cat you got going on there, that Sam Bankman fraud guy.
All right, everyone. Ponzi was a real person. He came up with some arbitrage scheme, and like scam, Bankman fraud, or Freud, or fraud in our day, he was kind of narcissistic, and he didn't mind ripping people off because he had no. Narcissists really don't feel empathy for other people, so in their minds, they're so much smarter than everyone else, and they don't care if people are losing money. And that's what we got with scam, Bankman fraud. That's what we had with Enron. That's what we had with Madoff. And back in Ponzi's day, we had that too. But Ponzi was actually kind of interesting. There should be many books written about this guy. And in addition to his fraud in the arbitrage of stamps, right, he did other time in the clink for running illegal aliens, writing fake checks, so forth and so on. All right, let's go to our next sector now. This is our financial sector, and once again, we can see this important dynamic here of some price levels are more important than others. Resistance became support. Seller's remorse. Actually, sorry, buyer's remorse. People buy. Oh, no, I'm sorry. Seller's remorse. Hey, come on, man. It's a Wednesday night, and I don't have to work for the next 4 days, so cut me some slack. Seller's remorse. Resistance becomes support because remorseful sellers tell themselves they want to buy their shares back because they regret selling them, but they are only going to do it if they can get them for the same price they sold them at. All right, so Senor Ponzi wants to come on again. All right. All right, Mr. Ponzi, let us know what's up, dude. The floor is yours.
So it started going good, and I hired agents, paid them generous commissions for every dollar that they brought in. And as the scheme grew, investors were getting paid impressive rates, which subsequently encouraged others to invest. So by May of 20, I was making $420,000. By July of 20, I was ranking in $1 million per week, and by July, the end of that month, I was making $1 million per day. That's a lot of cheddar, dough, moolah, whatever you want to say. It's a lot of it. So I didn't know what to do with it, but I just said, hell with it. I put it in the bank. So I started depositing it in the Hanover Trust Bank of Boston, a little small bank on a Hanover Street in a mostly Italian banker neighborhood. And in hopes that I could once get my account large enough to where I could force them to let me be president, therefore legitimizing what I was doing, because I was a criminal. I knew I was scamming. So I got some friends of mine to buy in with me, and we deposited $3 million in the bank. So by July of 20, I had millions. People were mortgaging their homes, investing their life savings. And here's the thing, just like them apes and just like them people with them GameStop shares, Nobody sold them. They're like, oh, let me just reinvest back in the company. Meanwhile, I'm setting up branches in Maine, Jersey, all the way down to Jersey. It was a beautiful thing.
All right, so that was pretty interesting. I would say you're an infamous character, and you did so much that we don't really cover a lot of it here because we could basically do like 15 newsletters on you. But when you were selling your product, it was massive. People opened up offices. Did you know that? Well, I'm sure Ponzi knows, but the people that are listening to me, he was in Boston. At one point, three-quarters of the Boston Police Department was involved in his scheme. So when they lost money, he probably wanted to go to jail because at least there he could be safe. And plus, he had mafia connections too. So despite the fact that he defrauded people of tens, if not hundred millions of dollars, he only went to jail for 3 years. Then he went back to Italy, and then he came back to Florida and participated in the Florida land scam, which maybe will one day will be a newsletter here at stockmarketjobber.com. It's pretty interesting here. This industrial sector shows you how important psychology is, right? Notice how the $100 level was important. Well, this is because people like to buy and sell at round levels. There's really no logical reason why this sector that's worth billions, if not trillions of dollars, would stall out at a nice even level like 100, other than the fact that people that are trading like to say, let's buy and sell at a round level. So in general, if something gets to a round level like 100 or 20 or 10, there's either going to be some resistance or support. We call these psychological levels. So resistance has converted into support. Remember, seller's remorse. But now that support is broken. And when support breaks, it's not just symbolic. It shows you that the investors who created the support with their buy orders have left the market. And when buyers leave a market, sellers are forced to offer their shares or whatever market it is, whatever they're selling, at a discount. It could be, clothes, shoes, real estate. If there's no demand or buyers, sellers need to offer things at a discount if they want to get buyers to come in off the sidelines and pay them for what they have. So we've broken this support. Pretty good chance this goes lower. And hey, que fai? I could beat though. All right, Senior Ponzi wants to come on again and talk a little bit more. I think I might have offended him. All right, Senior Ponzi, come on. Let people know what's up.
So even though my company was bringing in fantastic sums of money every day, the simple financial analysis would have showed that I was running an operation with a huge loss. But as long as that money kept coming in and existing investors could get paid with new money, then it was the only method I had to continue providing returns to those existing investors. So as long as I made those efforts, I never really made an effort to generate legitimate returns. So my rapid rise drew a lot of suspicion. So then I got sued by this cat named Joe Daniels. Man, this fuzzle. He was a furniture dealer, and I couldn't afford to pay him for his furniture, so he sues me. And the lawsuit was unsuccessful because everybody knew I had tons of money. But then people started asking, like, how's this guy go from being penniless to a millionaire in such a short span of time? And the newspaper editor became suspicious, and he assigned an investigative reporter to look into my company. And this fucked me up after that.
All right, well that's pretty cool. Whatever, dude. You it's like Don Corleone says in The Godfather. Like I have, whatever way you want to make money, it's not my business. But it was pretty uncool to rip people off, dude. You probably shouldn't have done it. I mean, you were so smart, you could have figured out a legal way to make money. But anyway, this is our communication services sector, and we can see here support becomes resistance because of buyer's remorse, right? People buy, the market goes higher, they want to get out at break even, so they place their sell orders at the same level that they bought them at. So support converting into resistance is a common dynamic in market, and it's also a very important thing to understand, because if you understand it, it's going to help you make money. Understanding which price levels are important and which price levels aren't is, in my opinion, probably one of the greatest uh, things to understand for success. For example, at stockmarketjobber.com, we don't worry about esoteric things like AI and bizarro methods like GAN. We look at levels, momentum, and trends. Here's our consumer staples sector. This is the ETF that tracks it. I guess I should have probably said that before, but we follow the ETFs that track these sectors. In the S&P 500, there's 11 sectors. And by examining what's going on within the sectors, we can get an idea of where the broader market's going to go. It's almost like you're looking behind the scenes or looking under the hood or so forth. But this was a trade that we had recommended, or I shouldn't say we, I guess it was really just me. But, the students kind of get it, and we're all in this together. So we have something that ran into resistance. That's your level. It was overbought, meaning it was trading above what would be its normal or historical trading range. And when something breaks out of that range, it attracts sellers into the market. Most stocks are, actually all stocks or markets spend most of their time trading within their average ranges. All right. If something gets above it, we call it overbought. If something gets below it, we call it oversold. This is important because this is going to attract momentum traders into the market. If something's overbought, it's going to bring in sellers. So we have like kind of a triple whammy here. So this was a pretty easy trade to call, and I know some of y'all made some good coin on it. And it is Christmas or a holiday. So hey, you want to send out Professor Mark or stockmarketjobber.com a little, I take gold, I take cash, I take checks. Nah, just kidding. I'm just happy to be able to teach you. So we got to an important level. We were overbought. We broke a trend line. The market's going down. All right, dude, come on, man. All right, so Mr. Ponzi wants to come on again. All right, dude. I mean, come on. You have come back from the dead to be here because you've been dead for like 120 years. So I don't know, man. Can ghosts predict the future? I kind of believe in ghosts now that we've had one in our house. All right, so let's hear what Mr. Ponzi has to say.
Here was the beauty of the whole thing. In this article, they noted that the investments made covered around 160 million postal reply coupons. Think about that now. But however, there was only 27,000 actually in circulation. Nobody ever checked. Meanwhile, I hired this publicist, William McMasters, and he kind of got suspicious of me, honestly talking endlessly about these Ponzi, these postal reply coupons. So he kept investigating, and he put an ongoing investigation against me. Later, he described me as a financial idiot who didn't even seem to know how to add. Now, I can add quite a bit because I got all this money. I put it in the bank. I even tried to buy a bank. My downfall began in late July when McMasters found several highly incriminating documents which indicated I was merely robbing Peter to pay Paul. Yeah.
All right, that was pretty cool. That was pretty cool. I mean, I know you probably don't even realize you were a narcissist, but you didn't have any empathy or feelings for ripping people off. But all that being said, dude, please do not haunt my house. I don't want you to be a mean ghost. If you are, I'm going to call up the people from Paranormal Caught on Tape, and I'm going to get some priests over here to send your, soul back to where it belongs. Material sector, once again, we can see support becomes resistance. Resistance becomes support. Looks like it's breaking down. Here we have our energy sector. I think that because of the incompetent idiots in the administration that just passed this $1.7 trillion uh, thing is going to lead to more inflation. So even though this is testing support, I would not jump on this yet as a trade on the short side. I'd be looking for, oops, let me go for my pen here. I don't know. I think I would be on the sidelines. I think there's a good chance we get another big move higher. All right, I'm going to bring on Senor Panzi one more time. Hey, Capita. All right, let's hear what you got to say, sir. And thank you for joining us. You've been a great guest.
So on August 11th of that year, it came a crashing down. Two federal indictments. I was charged with 86 counts of mail fraud and faced life in prison. My urging of my wife, I pleaded guilty in November 1st, 1920, to a single count before Judge Clarence Hale. He's a good guy. I had to pay him quite a bit, but he's a good guy. Who declared before sentencing, here was a man with all the duties of seeking large money. He concocted a scheme which, in his counsel's admission, did defraud men and women, and it will not do to have the world understand that such a scheme as that it can be carried out without receiving substantial punishment. And I got 5 years in federal prison. Not much punishment. That's kind of like made millions and I got 5 years. Not too bad.
All right, so those are some cool comments to wrap things up on. Now, real quickly, let's just kind of go through our small sectors here. We got our real estate ETF support, became resistance, and now looks like it's breaking down. I don't have it here on the chart, but this support around 34, if you look back 2 or 3 years, it was support back then, and that's a perfect example of market memory. So this is our real estate sector. And finally, we're going to look at our last sector, which is utilities, which can be boring, but it can be exciting if you're making some money off of it. And will the level that was support and resistance become support again? If so, we can get a bounce. So I see Mr. Ponzi is still kind of hanging around in the wings here, and he wants to talk about scam, bankman, fraud. And you know what? Scam, bankman, fraud is going to get what he deserves. What an ass. I mean, this guy lost so much money for people. And you know what? Those people should have realized that he was a scam artist, but so I don't have any sympathy for institutional investors that lost money with him. If they had done any kind of due diligence, it's like, dude, you go to a friggin' hippie commune where they're having orgies you know, the Bahamas, and you have fat vegans. That should raise a bell or raise a red flag. I mean, I feel sorry for retail investors that got scammed by him. I don't feel sorry for institutional investors, but the institutional investors are actually managing money for retail investors. So I would suggest that they find different money managers. And I would suggest that you sign up for stockmarketjobber.com, because then you will learn how the markets really work. I spent 20 years in the institutional trading world. I was a market maker. I probably oversaw the trading out of, I don't know, maybe 12 or 15 different hedge funds. So at stockmarketjobber.com, we know what's going on in the real world, and we just want to help you teach yourself how to make money. We're not going to tell you what to do. We're going to teach you how to learn what to do on your own. At least that's my goal.
Hi. I'm Scam Bankman Fraud. I'm a woke progressive douchebag. Now, I may not be that way much longer because I don't think they give vegan options in the dining hall at the prison. But Mark's saying here some very rude things about me, and I'm not going to even give them credence or speak them in there because, well, I'm polyamorous.
All right, everybody. So just to wrap some stuff up here, the marketing people tell me I got to talk about my background, and I kind of feel like, whatever, big deal. I was lucky. I worked for Steve Cohen. I worked for Mario Gabelli, two of the greatest money managers in the history of our industry. You know, Cohen is literally could be the greatest trader who's ever lived that we know about. Gabelli hired me out of business school, so I'm always going to be indebted to him. And I learned so much at these places. But I was also the head of training at 3 different institutional money managers. So I've overseen the trading of numerous hedge funds, and I was a market maker, and I got a business degree from NYU, which is one of the top schools, and blah, 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 blah. People are like, oh, dude, you're so humble, blah, blah, blah. Well, you know what? If you're in the market and you're not humble, the second you get arrogant, it's over. So the market knows more than you do, and hopefully you'll sign up for stockmarketjobber.com, and I will see you soon. Thanks, everybody. I appreciate you being here.